I just returned from Washington, D.C., where I was fighting for small business owners. We were there to discuss some of the biggest issues that have massive consequences on our cash flow and ability to grow. We also went to Capitol Hill to meet with lawmakers and their staff to tell our stories in the hopes of getting them on our side. Today, I'm going to dive into the 4 biggest issues that are super important to understand what these issues are, the financial impact that they have, and to vote accordingly this November for the politicians that are on our side. So, 2 of the big issues are related to sunsetting provisions in the 2017 Tax Cut and Jobs Act that Trump passed. The first one is what's known as the 20% QBI deduction. So basically, QBI stands for the Qualified Business Income. It is also technically referred as 199A for all you tax dorks. And this applies to all small businesses. So if you have an LLC, an S-Corp, a sole proprietorship, then you need to listen up. Currently, how it's written, if you own an LLC or an S-Corp, for example, all of mine are, we get to take a 20% straight off the top cut off our income. Instead of getting taxed on $100,000 of income, we would get taxed of $80,000 of income. As part of this act, C corporations, which are normally much, much larger corporations, publicly traded companies and such, they reduced their tax from 35 to 21% to make them competitive with other countries around the world. Now, the QBI discount, our 20%, was to give small business owners a fighting chance to compete against these big companies. Now, the C Corp tax rate is permanently set at 21% from that reduction at 35, but the QBI one, the one where we get the 20% haircut, is expiring. After this thing expires, like, our taxes are going to go up, small business tax are going to go up, but the big companies who make millions and billions of dollars is not. Part of our goal was to just explain the impact that it has on small business owners, our ability to grow, to create jobs, to pay more, because we're going to be paying taxes instead. And that's not good for the economy. So that was a big one that impacts every single person who owns an LLC, an S-Corp, or is a sole proprietor. There are some conditions about it, but if you're currently getting it, you probably know it. Number 2 is 100% bonus depreciation. Before the 2017 Tax Cut and Jobs Act, if we purchased a $10,000 piece of equipment, we would expense that equipment over 5, 7, or 10 years. So for example, over 10 years, we would be able to deduct $1,000 per year for 10 years, even if we paid $10,000 in cash for that piece of equipment. So $10,000 out of pocket, like I don't have it, but I can only deduct $1,000 per year over 10 years instead of being able to deduct the whole thing because I bought it, right, in 1 year. Now, this bonus depreciation provision, it did exactly that. It allowed us to deduct 100% of the purchase price of this asset the year we purchased it, instead of spreading it out. And this was a huge benefit for anybody who's in an asset-based business. So for me, we're an auto repair. We buy shops that have lifts and tire equipment and racking and computers and, all this like physical stuff. And it allowed us to deduct that the year we bought it, and it helped save us taxes that stayed in the business that we could reinvest and compound by buying more shops, by opening more locations, by employing more people. And this was a critical component for us to grow from 6 locations in 2016. We had 6 locations. This thing passed in 2017. Then from 2018 to 2024, we grew from 6 to 33. And a huge part of that was this provision. It saved us, over $1 million in taxes that allowed us to reinvest the stores and continue to grow, create new jobs, and pay above market wages. And as it's set to expire, it's going to go back to the old way that, forces us to spread out these large expenses over many, many years. This is a big one that we're really advocating them to bring back, and there has been bipartisan support for this, but they're not going to get it over the finish line until 2025. And speaking of 2025, it will be known as the Super Bowl of taxes because this 2017 Tax Cut and Jobs provided some of the biggest tax cuts in the history of the country. It led to massive economic growth, and much of those provisions are expiring in 25. If reinstated everything, like if they just said, hey, everything we did there, we're going to continue to do it, it would cost the government over $4 trillion in taxes over, whatever period of time. But on the flip side, that means business owners like me and you, if you own a business, are going to pay $4 trillion more if they don't do it. I know this is novel, but why don't we talk about how do we spend less money? Like as a business, if we don't have as much money coming in, we're talking about how do we spend less? Apparently, nobody talks about that. Nobody talks about, wanting to spend less in government. It's all, let's just tax more. Let's just tax more. And that hurts the economy. It hurts growth. It hurts job creation and everything else. Do you want to learn how to make money by owning franchises? I've been in franchise almost my entire life, and I've helped countless people start and scale their franchises. And so every week in my free newsletter, I give tactical tips on how to find, operate, and scale franchises. I believe franchising is the best vehicle to build cash flow and wealth, and being a franchisee has changed my life. And so whether you were just getting started or already running a multi-million-dollar franchise business like me, I promise that you will get value from it. So click that link below to subscribe. You'll get a welcome email that asks you to respond, tell me about yourself, and I read every single one of them, so I look forward to hearing from you. Cheers. Number 3 we talk about is expanding what's known as the Work Opportunity Tax Credit, or WOTC. You may hear people refer to it as WOTC. Anyway, what this does is it gives business owners a tax credit for hiring employees who faced constant barriers to employment. This provision is there now. There's no risk of this going away. However, there is bipartisan support to grow this program and to expand it, because what it does is it gives business owners a tax credit to help hire people who are on certain welfare programs, qualified veterans, ex-felons, and a lot more. So business owners can earn up to $2,400 of a tax credit per employee they hire. This is a credit. This is like, instead of you paying $2,400 to the government, you get this credit. This isn't a deduction. Like a deduction would reduce your taxable income. This is like a one-for-one credit. Instead of you paying the government, this credit reduces the amount you owe. So this has massive impact. Last year, we received over $50,000 in credits, so taxes we didn't have to pay because of these programs. So if you run a blue-collar business like I do, I highly recommend getting on with these WOTC credits if you don't currently do it. My recommendation is to use a service that integrates with one of your payroll providers. So then when you onboard a new employee, they're putting in all your payroll information. It just asks them a few questions as part of the onboarding process. It's totally seamless. And the third-party service then takes care to see, hey, does this person qualify? They will submit the paperwork to the government. They get whatever documentation they need to verify. And at the end, if they get us a credit, so let's say it's $2,400 credit that we get, we pay them a percentage of that credit. I think it's like 10 to 20%. Huge program. Highly recommend. That integrated service is the best, because before we have made the people or try to get the people to use like another website to fill it out, and they just wouldn't do it. They'd forget about it. We'd forget about it. And our big change of capturing these tax credits was when we made it integrated into our process. So this is something that everybody supports, and it's just a matter of getting it on their radar to expand this program, to get more people to work. I don't know the numbers off my head, but I know there's millions of people who have stopped looking for employment, and there are millions of job openings. And so this is one of the ways to try to bridge that gap, to encourage employers to offer employment opportunities to people who need it to create more jobs and improve the economy. And this is a big one. It should be an easy win if enough people get on board. And finally, this is a franchise-specific one, but it's joint employer. So this issue of joint employer could kill the franchising industry as we know it. And it's been a lingering concern for over 10 years. Basically, it's an opinion, not a law, from the National Labor Relations Board, or the NLRB, who has oscillated back and forth based on who's president. So the president appoints people to this labor relations board, and based on who's in charge, whether it's Democrat or Republican, it has changed on what they view. And it all comes down into this question of what qualifies as an employee, who is their boss, who is determining their pay, and there's this misconception. A lot of these people don't know how franchising works. Many of them have been in government their entire life. They've never worked a private sector job. They just don't understand. And so they view franchisees as this total general manager of a franchisor, and thus wants to connect them. They think of McDonald's, which, biggest franchise in the world, but that's a tiny percentage compared to the hundreds and thousands of franchisees who are independent small business owners that happen to share a brand name. They happen to share a process. They buy a business. They buy this business in a box idea. But at the end of the day, the franchisees, I'm the franchisee, I determine who I hire, what I pay them, how I treat them. And the franchisors and like Midas or That One Painter or any brands that I'm part of have zero say in who I hire. They don't interview them. They don't tell me what questions to ask. They don't determine their pay. They don't determine how I treat them. And what this law is trying to do is trying to say, hey, Midas, for me, down in Florida, is responsible for the actions that I take up here in Philadelphia. And you know what that would lead to? Massive increases in lawsuits. Because if my employee and you think there's some issue and you get a lawyer, you are going to go not only after me, but you're going to go after Midas Corporate. You're going to go after the deepest pockets. And then Midas Corporate then is going to make pretty much, if they're involved, part of my franchise agreement says that I have to pay to defend anything that they get involved in that's my fault. So now all of a sudden I have to pay my attorneys and I have to pay their attorneys. It would destroy me as a franchisee. It would also create potential for class action lawsuits between franchisees and franchisors. It could create unions, and like it would totally wreck the franchise system because franchisees don't want to be controlled on telling them what to do especially when it comes to people and culture and all this stuff. And franchisors don't want the liability because they're not involved. Like why would you take on liability and be held liable, potentially liable, and to be sued for actions of people all over the country that you have zero like interaction with? And so it's this huge issue. In the request that we have in the franchise industry to the lawmakers is to understand there's a clear delineation of who's responsible for what. Only I should be liable for my employees. That should have nothing to do with the franchisor. And if we want it to be a law, not just some opinion that changes every 4 years, we want it to be a law. So it's very clear, it's cut and dry, it puts this thing to rest. The person directly signing the paychecks, me, is the one who's responsible, not anybody else. And if that doesn't happen, and if it goes the other way, franchising, as we know, is over because it's not worth it. Those are the 4 big issues. It's the QBI deduction, the bonus depreciation, the WOTC credits, and the joint employer. Those are the things we were on Capitol Hill talking about. And so what you can do is look to see who's running in November in your market. Look at the policies and the positions that they take on these things and vote for the person who aligns with your view on this. So if you view that, hey, taxes for small business owners should be lower, then vote accordingly. If you don't believe that and you think, hey, small business owners should pay tons and tons of more taxes, then whatever. That's your take. The big thing here to know is that as a business owner, you can thrive no matter who's in charge. And that's the best part, right? I control my own destiny, and I will fight and do whatever I can do to lower taxes and have less regulations to make it easier for small business owners to create jobs and improve the communities that they live in. But if it doesn't go that way, I'm still going to make it work, right? I'm still going to do whatever it takes to win because I control my destiny as a business owner. And yes, it will cost me more. And yes, I will have to pay, and it will take a lot longer. And maybe I don't hit the goals that I want to do. But at the end of the day, I will continue to survive and I will thrive. And that is why you go into business for yourself, is because you control your outcomes and nobody else. That's all I got. Never quit. I'll see you next one. Cheers.